Well, good morning, good afternoon, good evening, everyone. Welcome to this latest INMA meetup. My name is Mark Challoner. I'm the executive producer for INMA. I'm coming to you live from London, England. Although we have some speakers literally from all over the world for you today. As we have in terms of registrants, we've got an amazing turnout again. I think we have nearly about 200 registrants from about 40 countries. So welcome, everyone. If you're not familiar with the meetup format, it's a derivation of our webinar program. Usually they're about once a month. They're chaired by Greg Piacciotta. People will know him as INMA's researcher in residence. I'll be handing over to him shortly. My role today is make sure we have a clean fight, no fighting, etc. But you'll hear more from Greg and I'll speak it in a moment. But just some house notes to start with. This is all part of our Readers First initiative, which is our industry's deeper dive into monetization engagement of readers. And that includes all manner of engagement platforms and tools, newsletters, events, Slack, original research, reports, etc. So do contribute, do get involved. Just search on a website for the Readers First initiative. The format's different from our usual webinars. We encourage you to participate live and very much in the moment. How do you do that? Well, if you scroll your mouse across the screen, you'll see a chat button. If you scroll across, it'll be different on a Mac or a PC, but please ask questions as we go anytime, and we'll try and cover all the questions asked and even give you a chance to appear live to ask it if you should so desire. So with all that in mind, please turn on your video. We want to see you. You'll want to see your peers too, some around the globe, so it's much more friendly when we can indeed see who's asking the questions and who is on the meetup generally, so please switch that on. Meetups also allow for some live interactive polls, so watch out for those too as we progress on your screen. Today's meetup is being recorded. A link to the slides and the video will be sent to your inbox over the next 48 hours. So without further ado, let's get into today's subject, which, as you can see, is all about Readers First meetup, the subscriber retention during a downturn. And I'll turn over to Greg. Presumably, Greg, you're about 60 miles away from me up in Oxford, is that right?
Yes, this is exactly where I am. So I'm shielding in Oxford, locked down at my home with my wife and two kids who are, homeschooling. So we try to survive another week being in a lockdown. But I'm very happy to be today in actually, to have a meeting today with guys all over the world. So we have Curtis Huber from the Seattle Times in the United States, and we are just seeing, the center downtown of Seattle being deserted. I understand these spheres are part of the Amazon, investment. Is it the case, Curtis? Is it Amazon headquarters?
Yes, yeah, that's the globes they call them of Amazon's campus in South Lake Union, Seattle.
Yeah, in a way, I can tell you, I rely on Amazon very much for my shopping, so it's great to see you. And then we have people in Atlanta, and the Atlanta downtown looks like, it looks like a poster for this famous and popular TV show. What's the name? It's Living Dead, or what's really is it about? Is it really that empty today, Matt?
It has been, yes. It's like there are zombies walking around, but not much activity.
So, but luckily you are still not infected by any zombie disease or coronavirus. So Matt Lindsay, president of Mother Economics, and Arvid Chivzel from senior director for product development for Mother Economics will be my expert guest today. We will be talking soon, but before we get there, I would like just to pause for a second and appreciate the unprecedented times that we live in. When we look at the demand for news during this COVID-19 bump, we see this is really something that hasn't happened in the past, 15 years. When we look at the numbers from Google, so we measure demand for news based on web searches for news. And what you can see is, what we've experienced in March is like something that was a double of the demand in the past 5 years, and a triple of what we've experienced in 2005 and 2010. This is really unprecedented. And when we look at the demand for news in China in the past year, what we see is that it's actually much longer bump that things that we experienced in the past, because this lasts already in China. It lasts more than 100 days. And what you can see is that there is not just one peak, but actually several peaks. So this is a big question for us. You know, how long does it is it going to last? So I thought it would be a good idea to actually use the wisdom of the crowd, of INMA crowd that we are having today, and we prepared a poll for you. So I would like to ask you, when do you think the demand for news will come back to the pre-COVID level? Is it like it has already come back based on your numbers? Or do you think it will come back soon, but the decline will be quick? Or do you think the decline actually will be slow? Or maybe you think it will not come back soon and we may expect new peaks in the future. Tell us. I'm really interested in your answers. I personally just don't know. And I don't think anybody knows for sure, but you know, maybe when we collect all the different opinions, maybe we can get closer to some sort of a prediction of the INMA experts. So what's the result?
So Greg, it seems we're having some technical difficulties again. The poll's been launched, but I don't believe it's allowing attendees to enter in their responses.
I just entered the response.
You
Actually,
did?
I voted for myself, yes. What about you guys? Are you seeing the poll? Have you responded?
Yep, yes. This is Patrick.
Yes.
Well, that is incredibly misleading on my end. Okay, I'll try to share the results and we'll see what happens.
Okay. Oh, actually, most of you, so 43% of you believe that it will end soon and the decline will be slow. 30% of you believe that actually it may be prolonged pattern. It may follow the prolonged pattern and we may expect new peaks in the future. And the 20% of you believe it will end soon and the decline will be quick. We will, of course, see very soon. But it's interesting, you know, some of you who read my newsletter for INMA, Readers First, may have noticed that actually when we look in the historical lifespans of different news events, we see that demand depends on an event. So some events like, I don't know, elections might, excuse me, the demand might climb slowly, and it will also fall slowly. So there is a buildup of an event. We learn more. We have a peak. There is this moment of a climax, and then of course we are waiting to learn, you know, what the new government will be doing, what will be the new policies. Then we have some events like sports events where perhaps the buildup is slow because we have all the playoffs and, you know, all the games, and then we have the final, and then the interest in this news might actually fall quickly. Then there are also these strange events that follow a completely different pattern. We call them non-symmetric events with multiple peaks. Some example in the past would be, for example, well-known trials. When you have a big trial of somebody, you have several peaks. The trial starts and everybody follows, you know, what's going to happen with somebody, and then there is of course the result. There is a judgment day, and it might perhaps be another peak. We don't know which pattern will the COVID-19 follow, but it's interesting to see that so many of you believe that actually it might be much longer than we originally might have been expecting. Another news. This is just from yesterday. So my colleagues from Oxford, from the Reuters Institute here, they published their newest study made in 6 countries of the world, when they asked about the proportion of people who used several different news sources. And it's so amazing to see that at the times of the crisis, people turn actually to news organizations, and they turn to experts, they turn to scientists and doctors. Some countries also, people believe governments. UK is one of them, surprisingly or not. If there is something big happening about this coronavirus pandemic, is the comeback of reason and expertise. You know, we get reports about, you know, partisan websites actually not enjoying any bump. We see news about influencers losing traffic and losing revenue. We see the bump in amounts people want to pay for news organizations to deliver the news. Perhaps this is how it should always be, but at the time of the crisis, we just have a reality check about people's priorities. And then this is the latest numbers about online subscriptions. This is a courtesy of Piano that collected the data for almost 300 paywall news sites around the world. And as we see, the peak of the bump has already passed in Europe in mid-March, and at the end of March, it also passed in United States. But still, people are selling many more subscriptions than before. You know, it's a double rate in Europe and 70% above the averages pre-COVID in the United States. It still seems people are enjoying the big bump. Of course, what's going to happen in the future? We will be talking about it very soon with our colleagues from Atlanta. You know, when I was asking our members about their different tactics, especially about retention in March, they were mostly focused on making sure that their print readers who might be affected by the COVID-19 problems, like, you know, problems with logistics, with the home delivery, or problems with accessing newspapers in newsstands if newsstands were closed. So a lot of efforts in the retention at the bottom of the funnel were focused on how to get people to maybe get back to digital, switch from print to digital offers, or maybe how can we deliver print codes, you know, for the online access, or how can we activate print readers to actually enjoy, you know, delivery of e-paper online, or maybe they should learn something about live blogs or newsletters or puzzles that they can enjoy online. But today, of course, the focus shifts towards a new question. How do we actually keep the readers that we have just acquired during the COVID bump in subscriptions? And the first guest that is going to tell us about their strategy and their tactics is Curtis Huber, the Senior Director for Circulation and Audience Revenue at the Seattle Times. Curtis, the floor is yours.
Well, thank you, Greg. And you're right. I can share our perspective. I certainly can't give an expert opinion because I am no expert, but what I can share is our experience and how we looked at the past to help guide the future, and then try to determine what's different in this particular situation than in other periods of time when we saw these bumps take place, as you would.
Before we get to the case, can you just tell us like a very brief introduction to the Seattle Times? You know, what's your circulation? What's your digital subscription base?
So Seattle Times covers most of Washington State, but like many papers, we've kind of pulled back and we focus within our core. We've got 200 daily customer or 7-day customers for the most part. We're about 65% audience revenue as a company and are sitting at 56,000 digital-only subscribers. We began digital subscription business back in March of 2013.
Thank you very much.
And well, so for us, I returned from INMA's subscription week in New York, landed in Seattle on February 29th, turned on my phone, and there was a news alert that we had the first coronavirus death that day. So that's when the corona surge started for us in Seattle. At the end of March, we were seeing business about 4 times as great in terms of start conversions as we had trending up to that and the previous year. We're 45 days in now, and we're sitting at as of this morning, 12,000 orders. So our pace is not slowed. We are still in 350 to 400% of our normal volume, including yesterday, and we have seen peaks at 600 to 800% in some of the key areas. So we started this retention with, like we've talked about forever, start with the start when we think about the retention. And while there was always going to be some element of making coronavirus information free to the public as a public service in safety, health, and welfare, it wasn't necessarily going to be all of it, but we decided early on that all coronavirus coverage was going to be in front of our wall, And it still is today, 45 days later. Even a story about an Olympic athlete that's not going to be in the Olympics has nothing to do with health and welfare. But it's still sitting in front of our wall. We have a metered approach, and we have taken our meter from 4 free down to 3. All of the COVID stories will count, but you'll never hit the wall while you're on them. But effectively what we've done is we put a hard wall up if it's not COVID coverage, because they're at 4 by the time they actually read a non-COVID story. And we were really focused on, we believe the vast majority of all of our conversions are not new readers. These are people who have been with us. They've just been somewhere along the purchase journey, and this has helped them get there. And so we were really focused on making sure we were building habit and loyalty and getting them connected to products we already had. So we didn't spin up any new products. We didn't create new newsletters, any particular verticals. We focused on what we had. We curated and we pushed and distributed through alerts and desktop notifications in ways that would make it the centerpiece, but we did not divert any resources. We were really focused on bringing these folks in and then building loyalty and habit. Because if there's one thing we know about retention, it's about habit and it's about tenure if you want to build loyalty. And as we're seeing, most of our starts are coming in voluntary. No one's ever hitting a wall on a coronavirus story. And as I said, we're still writing 400% the normal volume. 35% of those are coming from the paywall. The other 65% are voluntary. Typically, in a non-COVID environment, 55% of our starts come because somebody was forced into a buying decision by the wall. So certainly much lower are coming as a result of a forced decision. And the other thing we decided early on that we had a trigger to subscribe. It was necessity and it was content and it was information. We didn't need price. And so we eliminated any sales that were taking place and just go with our typical 4-week introductory offer and then flip straight to full price at $3.99. So we started early on thinking, what have we learned from other points in time where we've had these big subscription surges? One of them going back to a Super Bowl win of our NFL team, but all the period of time leading up to it, the entire season. So we had 3.5, 4 months worth of activity that was bringing in a particular segment, unlike, everyone in the world. This was a particular segment, but we did learn what was happening in terms of how those starts were coming in and then what the retention would look like. And the learn with large catastrophic events, we had mudslides and all types of things, was when content is there, that's the trigger. And again, we stay away from discounting and special offers to lure people in at that time. And the people are coming and they're looking for that unique perspective they can't get anywhere else, and people will pay for that. We looked at the retention curves in all 4 of these events and found that they were very similar to just normal day in, day out business. We typically will see a churn rate of about 3% of our digital only subscriber base in a month. In all of these cases, it bounced around between 3.15 to 3.2%. So very little difference in the way these readers retained over time. And when I talk about that change in the retention curve, I'm going 6 months after the event took place. So we didn't see, nor are we really expecting this time that we're going to have this big cliff. And I'll get into that more in just a moment. I think you're muted.
Yeah, that's a very interesting point, Curtis. I'm just seeing that Alan Hunter from the Times and the Sunday Times in England is here, and he has something to add. So he has very similar observation. Alan, are you there? Can you tell us what have you observed with your bump?
Hi, sorry, I'm sitting in the wrong place. I was sitting on the sofa. So what I observed was we had a previous kind of virus event, if you like, in the form of Brexit. And we obviously acquired a lot of subs in late 2016. And essentially they stayed and they kept, we didn't do anything particularly different for Brexit, apart from doing our standard coverage as discussed. It kind of what was interesting to me was that clearly people, you know, the feeling in Britain was that people got bored with Brexit. They were still reading about it. But the second we stopped writing so much about it, which was the day after the general election last in December, our numbers leapt up dramatically in terms of usage of particularly of our phone app, where literally it went up by 15% overnight in terms of usage numbers. And actually has now gone up again with COVID-19. But it was just very interesting that we got in a whole load of new people, and the vast majority of them stayed and kind of went to a permanently high level. They weren't just Brexit tourists, because obviously they came and read lots of other things, as we're discovering now, where people are not just reading about COVID-19.
Thank you very much, Alan, for your comment. Let's go back to Curtis. So, Curtis, let's maybe have a look into the research. I understand that you've done some special research about those new customers that you have acquired during the coronavirus bump. So, what have you learned?
Yes. So, I'm trying to make sure we're on the same slides. Just one moment. I think the slide after that is the research. What's that? Would you move to the second slide? Sorry for the technical difficulties here. Okay, so that, let me get myself back here where we were. So we went to the field with a survey, which is the next one, Greg, where you were, and these were the first almost 7,000 subscribers that had come in as digital subscribers. We got a pretty good response back from them. And what we learned from them, and this is in order. And so as Alan was saying, when we asked what was your motivation for subscribing? And there were some questions we asked after that, but the number one motivation wasn't coronavirus coverage. It was access to local news. And that, again, underscored what we thought was going on, is that we have a lot of folks that are casual users, or they just haven't gotten to the point where they want to subscribe. And this piece really put them, this was the trigger. And so 84% of everyone who started said their number one reason that they subscribed was access to local news. Second was virus coverage. And now they can multi-select, and it's pretty hard to figure out which was which there, but it was access to local news. And then the third was supporting local journalism, and that was 73% of everyone who subscribed also said that this was also to help out the organization. Now, as I said, we did not put any of our coverage behind the wall, but we were also walking this fine line. We're very careful actually not to broadcast that. It happened socially and organically, and the quote on the right is our governor, Jay Inslee, talking about what we did, tweeting it out and asking folks to support us. But we also understood that, as I said, 65% of our revenue comes from audience, 80% of that revenue comes from print subscribers. And while we were going to be struggling in the field, we knew with providing decent delivery service, we've got rates 4 times the price of a digital subscriber. We had to be really careful about broadcasting how you can get all this coverage for free, why they're paying for it, and maybe not having stellar service. So we let social do its job, and it paid off. And there's a letter I'll show later that we also communicated, but we were careful about it, and it gotten all kinds of goodwill. This is one of literally thousands of tweets that we received. We also found that the people who were coming in and subscribing were younger. This followed exactly the trend of in the States, which we all refer to as the Trump bump. The Trump bump for us started in October of one year. It had 3 peaks. It had the election of Donald Trump. It had the inauguration of Donald Trump. And within 30 days, it had the coverage of support free press because Donald Trump is trying to squash it. And so we had a long period of time to look at it. And what we also saw there, besides this peak in subscriptions, that the new normal was higher, the retention was good, and that they were younger readers coming in. And that's what we're seeing so far in this particular area. And so these people are falling into, when we ask them more about their motivations and would they be staying around, while the question wasn't quite so black and white. They fell into three categories. They were coronavirus-only consumers who also were very clear that they'd be leaving once the coverage was done. There was the bucket that was coronavirus coverage was the trigger, but they've been on the sidelines and habitual users to some degree as much as they could with a wall. And then the third were these folks that just want to support what we do and support the community, falling right in line with everything we had seen around the Trump bump. And lastly, what do we do with all of this information? How does it direct what we're going to do? So the research really confirmed what our thinking was, that these were folks that we just need to build loyalty and habit with. And it's really now about how we push information to them besides COVID coverage to try to broaden their breadth of what they're consuming from us. On the right is an example of an email that went out from our executive editor thanking them and helping them understand that we exist because they exist. We've modified our welcome email journey series to start pounding on some of these points, talking about the localness of what we do, the uniqueness of our reporting, and of course, supporting journalism as a whole. Spending a lot of time on how we push information out, especially our desktop notifications. During this period of time, we'd launched desktop notifications maybe 3 weeks beforehand, and we're sitting at about 70,000 users. Within 2 weeks, we're at 250,000. I haven't seen our numbers last time. So desktop notifications have been heavy lifters for us, and we're pushing them out regularly throughout the day. There's no fatigue, and we're now segmenting these new readers. We're segmenting what other topics that they have been interested in, and we are targeting segmented desktop notifications along those topic lines in addition to the coronavirus to those new readers. And we're just revisiting all of our strategies and the things we know around retention. And a lot of it, again, is building that loyalty. And we've redesigned the homepage and all the recirculation widgets with inside of it to think about, yes, we got a centerpiece corona coverage, but how do we make sure that they're seen and we're driving them into the other sections of the paper? You're on mute again, Gregory.
This is the beauty of technology. Thank you very much, Curtis. I'm wondering about one thing. You know, one of the biggest dangers that we might be having when we acquire those customers during a high interest news event, yeah, like a virus, like a Brexit, is that the fear that they come just for one thing, and therefore, we need to deliver that. But at the same time, we perhaps should be to make sure that they read also, they discover also other parts of the product, that they learn about the product. And so, you do it with these, you showed us the email from the editors, but do you actually, I don't know, do more of this kind of mixing? How do you think about, for example, when you present, I don't know, a newsletter about coronavirus, do you have like other topics in other news? Or, when you present a page with coronavirus coverage, do you have like non-coronavirus content actually presented on the page, just to make sure people discover you actually have something to say about other stuff as well?
Yeah, we do. And as I said with the newsletter, that was actually one of our thoughts too, to not spin up a coronavirus newsletter and use our morning brief where we could continue to sprinkle in the other topics that were not coronavirus. So that's probably the biggest way. The desktop notifications, as I explained, is another large way. And the curation of our homepage. We have found out that 54% of every start that has happened during this period has come through with a homepage visit at the time that they subscribe. So we know they're there, and we have changed the way our homepage looks. Initially, it was really changing it to really focus on coronavirus. And we have now slowly started pushing the other content up into what we would call the above the fold on the screen, so that they begin to see some of the other top stories outside of coronavirus.
Mm-hmm. Another question about retention. So, of course, what follows the health crisis is the crisis of the economy. The downturn that everybody is afraid, and we are seeing the signs, the unemployment rising in the United States, in many other places. So it is very much possible that very soon we will be seeing readers who want to cancel because of the hardships that they experience during the downturn. Do you have any special strategy or learning from the past how to deal with them?
Well, people may not agree necessarily with mine. I'm a firm believer in that you can't out volume rate. So I am not a rate reducer. We are looking at it obviously from a reader standpoint, but more so from an ARPU standpoint. And with new subscribers, yes, we start with talking about the value of the product. Then we'll reduce the rate, but not significantly. And then we'll let them go, and we'll try to get them in a comeback journey later on. But we're actually talking about accelerating our subscription rates, not just with the new subscribers, which that won't happen, but with the existing base right now. And I know that that's to some degree counterintuitive, but again, when demand is high, it's not the time to discount.
Okay, it's interesting. We've got a question from Stephanie Solomon. Can you please turn on your camera and just ask the question?
Absolutely. Hi, thank you so much for this meeting today. How much have you focused on providing your content in different formats, like audio or apps, or even formats like EPUB, to help with the habituation of these new consumers or new customers?
I think we're infants would be an overstatement. We've done very little in that area. Part of it's a resource and part of it's a focus. We haven't gone there. And quite frankly, when we've looked in some of the other areas, which, podcast gets a lot of coverage, we actually don't see the business case for it. Some of these things are bright and shiny and they sound great, but the bottom line isn't always there. And we haven't seen it enough to divert resources.
Okay, that's an interesting point. Thank you. That's an interesting point. May I just ask Alan again, because you are having a slightly different point, because I see you invest, I'm a subscriber of the Times of London, not the Seattle Times, not yet. And I'm seeing a lot of investment in video and podcast. Can you just tell us something about it?
Yes. So really more the investment is becoming podcasts, where we actually launched our daily podcast a month ago today on March the 16th, which was the first day of, if not the full lockdown down in the UK, very close to it. Actually, I think it was a week later, but it was very close to lockdown. So basically we had to start making a daily podcast, news podcast, on the actual day when everyone started working from home, which was a great challenge, obviously, for the team, but has been almost, the podcast has been almost entirely about the coronavirus outbreak. So really from us, we actually have found a lot of traffic is coming via our website rather than via, well, actually, a huge amount is coming via Apple and Spotify and Acast. But actually a disproportionate amount compared to normal podcasts is coming from the Times website. So it is an add-on for readers, but they don't have to pay for it, of course. One thing we've also done, we've actually also launched a coronavirus newsletter, which is free to air, which we think is a good area for prospecting for new subscribers. About half of the people who have signed up for it are non-subscribers. So we're hoping over time we can start to ratchet up the subs messages in there. And actually, sorry, wanting to hog the call. In contrast to a lot of the American papers, we have not put any content out for free. And there's two reasons for that, really. One is that in the UK, obviously, we have the BBC, which is doing, actually, I think, quite a good job on the public service element of broadcasting and, digital news. And, our principle is you have to pay for what we do. And we wouldn't give the newspaper away for free because there was a big story going on ever. We haven't in 200 years. So why would we do it in digital?
That's an interesting point. Thank you very much for these. So let us just jump to a poll. So the question I asked to Curtis, I would like to ask to all of you: when a reader asks to cancel due to the COVID-related hardship, what do you do? Do you try to save her by increasing the value? I don't know, educating about benefits, or do you try to save her by decreasing the price, or maybe do you try to save her by offering a pause? To pause relationship, like offer a break in payments or something, or you just don't try to save her, she's not worth it, go away, I'm going to forget about it. Or maybe you just don't know when and why my readers are canceling because you never asked. What's your answer? Hello, maybe we can get the results soon. Okay, it seems that the largest percentage of you is trying to save her by actually doing what Curtis doesn't believe in, so by decreasing the price. The second most popular answer is to educate about the benefits. And the third one is by offering to pause relationship. It seems that in general, only a few of you don't even know when and why your readers are canceling. Curtis, would you like to comment on that? What do you think?
It doesn't surprise me. And we do reduce the price to save someone. We just don't start there. And when we reduce it, we don't reduce it to some special promo offer. We reduce it to a half price offer for 3 months, and then that's it. That's all they get it, and they pop back. Yeah,
okay.
I think those are fine. I have no. Everyone's strategy and play is different. I have no problem with discounting to a degree. To the degree you don't change the perceived value of the product.
Okay, and now let's switch to our guests from Atlanta, Matt, Lindsay, and Arvid. Matt, would you like just to comment on the results of the survey? Is it a good idea to offer a cheaper price when people say they cannot afford it anymore?
Yeah, I think the alternative is losing them. I think that it's worth offering a discounted price. I think the other options you had are also good tactics. Sometimes people call, they just really want some information, or they want to perhaps some sort of understanding of what's going on. So I think that starting the conversation around value and then resorting to price if you need to is a great tactic.
Okay, thank you very much. So now perhaps we are going to switch to Arvid, because I've got your slides on the screen. So tell us, what have you learned looking in the numbers of the hundreds of your customers?
Sure, yeah, thanks, Greg. So we actually see pretty similar data. I think you shared that chart, about 70% growth or so in the United States by kind of mid to late March. These benchmarks here are pulled around that time. We're actively updating these as well on our side, but we saw pretty similar numbers. You can see in that left chart, the conversions there grew by about 71% in our database. Now that includes anybody who comes from a metered or paywalled conversion, voluntary, email click-through, really anyone who converts on the website. So that conversion number is by far the biggest bump that we're seeing in all of our data as well. The conversion rate as well. So not only is it just more people, but the ratio is improved by about 50% over the baseline. Again, more people hitting the paywall as we've seen. To the point made earlier, I totally agree. I think it's really coming from these fanatics, and you can see that the growth in engagement and the growth in just users really being engaging on all kinds of content has grown. About 27% growth in that fanatics metric. And just to kind of again level set, the fanatics are kind of that usually a top 3% or so of audience who are that most engaged group. That's really who the fanatic is, people right at the bottom of that funnel. But of course, again, we do see growth on the top of funnel as well. So about a 70% growth in new users. And so I think Curtis's points are good in that, the conversions are most likely coming from that fanatic, that loyal reader. But I think what's also happening is you're kind of taking people kind of out of that conversion funnel sooner than you would have under normal circumstances. So as you kind of fill in the top of the funnel, it's really important to kind of keep pushing people down, or focusing on those nurturing tactics as you keep going. I think what will happen, again, my theory is, and I'll talk about this in a minute, is that you're kind of taking people out of that bottom of the funnel faster. So therefore, over time, there might be a bigger drop than maybe some of the survey results suggest from the start of the call. But again, we'll talk more about kind of why we, our hypothesis there. In terms of other data, so we looked at kind of just article publication, article volume as well. So for most publishers, they're actually they're additive in terms of the COVID-19 coverage. So they have, period over period, kind of about 2/3 of them have published more content. Obviously that's COVID. We do see some publishers have reduced content. About 1/3 of publishers have less articles out there than they did. The kind of general trend there, we think, is just mainly due to maybe just the size and the circumstances of each city and each newspaper. Some may not have as many resources just available. Some may be just more challenged in getting journalists in a place where they can contribute. So it's that's kind of why we think that that's happening. But for the most part, there's more content out there. And when we break down kind of the distribution of COVID-19 coverage, it's about 15% is kind of the total amount of content. So it's, again, this was kind of pulled at the late, mid to late March. So perhaps it's grown a bit since then, but most publishers are not, it's not like they're producing only COVID-19 content and nothing else. There's still a lot of other great local journalism being done. And that actually leads to this kind of data here. So, if you look at your, Google Analytics or your Omnisphere data, and you see that, 200, 300% rise in page views, a lot of it is the COVID-19 content. However, when you break it down kind of on a per user level, we see some interesting trends. So it's, again, I think reinforces Curtis's point on the fact that, certainly this content is getting out there, but there are people reading non-COVID-19 stories. And that's still a big part of that conversion funnel and part of the reason people subscribe. So about only 1/3 of the audience on kind of our benchmark websites that we're tracking, only about 1/3 are kind of exclusive to COVID-19. That means they read 90% or more stories that are COVID-19 related. You can see that big part of that pie chart, the 42%, it's kind of a mix of both. So that's where we think that kind of, there's people kind of reading that. Obviously it's news of the day. It's super urgent. It's breaking news every day, but they're also still reading that local journalism, kind of that habitual content that is still so important. And then about 23%, we're kind of hypothesizing it's almost like COVID-19 avoidance. So it's not to say they don't read any COVID-19 content, but about 1/4 of users are kind of, it's less than half of what they're reading or more even. So we think that, again, these sort of data are helpful in determining, understanding more about what people are doing on the site, the reasons they convert. I think the only thing I'd perhaps, add to Curtis's comments on the retention curves is that 23% up there, the COVID avoidance, if someone converts on that content, perhaps that's where you, again, ensure that they are not bombarded with kind of the, these pop-up newsletters and all this content that's perhaps, too much for them on the retention side. And then on the 32% there who are COVID only readers, that's where we do see some correlation where perhaps over time, they may see a lower retention curve than perhaps the other 2/3 of this pie chart. The reason being that, people who convert exclusively for one kind of content, for one kind of news, you kind of have to sort of convert them or sort of nurture them to read the other content that you have and introduce them to the other features and things you're producing. So again, I think it's, long-term, my suspicion is that 32% on that pie chart will have a lower retention curve unless people kind of take some tactics to, engage them with the other content.
What I understand you are proposing is that these retention tactics should be personalized in the way that they should be customized to these different groups of people.
Mm-hmm. Exactly right. Exactly right. So, and again, it's especially for that 30%, especially nurturing them as they subscribe. Hey, by the way, we also produce all these COVID-19 stories. Kind of slowly nurture them to engage and be more habitual in their coverage. Obviously, the virus is sort of a global event, no question. So it's kind of a I don't think there's really any data to say this is what's going to happen exactly, but we do see some patterns in terms of, kind of that bump in subscriptions and what happens over time for these subsets of audience. So yeah, I think personalization is super important here.
I see Jessica Hayes has a question to you about this content. Jessica, can you please turn on your camera and ask your question?
Hi. Yeah, I was just wondering what content is not COVID related right now. I'm just looking, I'm at The Guardian, I'm just looking, even stuff that's not obviously directly related to the news, our culture content, lifestyle content, it's all still COVID related. I don't think I can't find an article where we're not mentioning it. So I'm just wondering what you're categorizing as non-COVID content.
Sure. Yeah. In this case, it's really any article that has kind of the COVID-19 or there's about 50 keywords that we found that were relevant to kind of your point. And it's really looking at any URL pattern or headline or things like that have any one of those 50 keywords that are related to a pandemic or coronavirus, things like that. But I think to your point, it's kind of what's amplified versus what's being produced. I think perhaps every story could have a COVID-19 bent to it, but it's sort of the things that get put on the homepage are obviously going to be that kind of breaking news, and it's perhaps you have to dig around for it. But there still are, I think, some stories. Maybe the business focused stories are perhaps less, maybe not as quite on the nose, and so again, I think there's still things happening out there that are not necessarily COVID-19.
Okay, thank you very much, Arvid. I'm seeing Katrina Bolak would like to add something about the topic of content. Katrina, can you please turn on your camera and share your comment?
Hi. Was not ready to go on camera for that, but I just want to say, so I work for the Globe and Mail in Canada. And something we've been testing is distraction emails. So as much as the content is sort of COVID related in that the reason why we're doing these distraction tactics is we're at home. Things like reading lists, how to exercise at home, recipes, anything that can sort of distract you from all the sort of negative content. We're seeing really good open rates and really good engagement rates within our emails.
Okay, that's cool. Thank you very much for sharing. Arvid, let's maybe perhaps go back to your presentation. So you've got this amazing case to share that perhaps will be very inspiring for many publishers. What might happen with a subscription bump?
Sure. So this is, the survey is really interesting for me to hear kind of at the start of this this call, where I think the majority, if I have it right, or the plurality perhaps, expected kind of maybe a slow decline, and maybe there's some long-term benefits to the bump. Obviously here what we're showing, this is a kind of the conversion pattern before and after a Super Bowl win. So the Super Bowl, for those outside the US, it's really just an American football kind of championship game. And you can see that kind of big spike there after the game in February. And I think, again, this is obviously not to equate a sports championship win next to a global pandemic. It's not what we're trying to do here, but just to demonstrate when there is sort of a very emotional, highly charged kind of content being produced, whether it's positive or negative, it's perhaps in some cases, in some sense, seasonal, where at some point, we'll get past COVID-19 the same way we did with SARS and other kind of major global news like that. So at some point, the COVID-19 coverage perhaps ends. I do agree perhaps where this curve is showing a very maybe compressed view of what will happen with COVID-19 bump. I think the COVID-19 bump, as you can see from Greg's chart at the first slide of his presentation, is it's perhaps a much more extended bump than this is showing. But again, we see the same kind of thing happen often with, again, natural disasters. We see similar patterns with like the California wildfires in the United States this past year and last year, where you see kind of these bumps every time there's a major fire or kind of news related to a fire. But what happens basically here is that, after that kind of peak emotion, or kind of after a new normal is found, once sort of the urgency and the emotion is gone, we do see that kind of bottom of the funnel almost kind of disappear in some ways, where you've kind of amortized all these subscriptions you would have gotten over perhaps a 2 to 3 or more month period, you've kind of amortized them all in one day or perhaps a couple of days. Obviously with COVID-19, that's on a scale we've never seen before in our data. But we do expect that perhaps once kind of the news shifts away from panic and what do you do and confusion and fear and managing that fear, we do expect perhaps a return to pre-COVID levels. The big question is when. I honestly don't know when. I don't want to speculate either, but we do see kind of surprisingly similar growth rates in terms of conversions. For a Super Bowl win, it's about 250% growth in daily starts. Again, we're seeing a 200 to 300% spike for COVID-19 over month or week periods. So it's obviously a very different scale. But again, the theories there is that you're kind of, again, amortizing these subscriptions today that you would have gotten over a longer period of time. Again, Alan's point is well taken too, is, if there's these, the Trump bump or the, Brexit bump, does that kind of institute a new normal, or does it kind of, take kind of the subscriptions out of the funnel and you have to kind of fill them again from the start? So that's kind of I guess the next page here. I know we're approaching about 10 minutes here, so I'll try to kind of speed up here, but we do see new users. I think this also presents a pretty big opportunity because our hypothesis is that we are taking these people out of the bottom of the funnel. You do have new users coming in. So I think right now, the emphasis for the way kind of we approach things is to kind of think about what's the next step. So right now there's no problem in converting users, which means that there is, probably less of a need for discounts. You're seeing a huge spike in demand. So right now is really the time to focus on these new users and focus on nurturing them longer term, making sure that you're kind of still pushing these new users down the funnel so that you still maintain that kind of long-term bump. So that's kind of I guess the theory of what to do and where to focus.
Arvid, we've got a question from Deborah Tolman from Advanced Local. Deborah, can you please turn on your camera and ask your question to Arvid?
Sure. Hi, Arvid.
Hey, Debbie.
So I'm looking at that slide you had before with, the sales accelerate when you have a big event, and then you have that lull. And I'm just wondering, is some of that just, you had your sales plan and you expected to get X amount of sales over time, but the urgency that was created by the event just causes those people to sooner. So the lull isn't really a revenue lull, it's a volume lull because you've already captured those people.
I think that's a fair point. I think it's, again, I think you're again, just kind of moving the conversion forecast, perhaps compress it to 1 day or 1 month, 1 day in the Super Bowl case, perhaps 1 or 2 months for the COVID-19 case. But then again, I think that, again, that's why we think the focus should be less on how do we acquire these people at this time. You're already getting the acquisitions. It's making sure you're filling the top of the funnel and that you're focusing on retention for the different sub-segments of audience. That's probably where my focus would be is for the next couple of months.
Yeah, that makes sense. Thank you.
Thank you very much. So now let's perhaps switch to Matt. Matt, what are the strategic implications of what we have just learned?
Sure. So I think most of these points have been touched on, so I won't belabor them too much. I know we're getting short on time, but essentially the key takeaways are that, I think there's a saying that's going around that don't let a good crisis go to waste. I think if you can really use this time to take a good look at your business practices and policies and really evaluate them and use the opportunity to make some changes, both on the audience side and the advertising side. I think that the opportunity cost of advertising is actually declining right now. So those of you that have really advanced programmatic advertising, that really what's happening is there's such a growth in inventory that the prices are falling. So in many cases, if you're trying to optimize your total digital revenue, there's less of a opportunity cost from having a tighter paywall and perhaps losing some of your advertising inventory. Of course, that's a very unique analysis for each publisher. I think that the point that Arvid has made, and I think that we've said a couple of times, both in Seattle, is that there are really segments of your customers that are subscribing for different reasons. We like to think of them as really 4 main types. There's people that are interested in content. There's people that are interested in the community. There's people that want to support the cause of journalism. and there's people that are cost conscious. So right now you've got this tremendous growth in content, a really renewed sense of community. There's people that want to support journalism. So really focused on converting those types of consumers. As we've said before, don't have a price discount right now while the demand is high. Save that for later on when the demand is low. And by the way, we will send these slides out so that you can see these recommendations in more detail afterwards.
Matt, thank you very much for this. I just wanted to say that Agata Pardo from Gannett wanted to add something about how they think about having a special retention program for the COVID-19 signups. Maybe this would be interesting, to compare with your notes. Agata, can you please turn on your camera and tell us your story?
Sure did. Okay, hello everyone. So yes, at Gannett, what we decided to do, we basically decided to look at customers who cannot afford to pay for the subscription at these difficult times. And we have isolated a very specific stop code reason and trained all of the reps to basically use the revised scripting. So when we talk about saving the customers, we're not talking about saving across the board, right? Customers call for a variety of reasons to cancel the subscription, but just for COVID related, customers that basically are experiencing hardships and they cannot afford subscriptions. We have basically created a very specific script. So yeah, we did reduce rates, Curtis, because we knew that it's important for that segment. And one of the things that for us, it's a win, we never before were able to really track the saves at the stop saver reason. Well, we figured that obstacle out. So we can really look at the performance before and after. So when somebody is calling us for, let's say, I cannot afford your subscription and it's COVID related, we definitely can say and see the lift. So we can look basically at, the revenue gain, you can say, because if we wouldn't have that particular stop saver in place, we would basically lose those customers as they just have a hard time, right? Keeping up with paying for the bills. So for us, it's basically a retention tactic, engagement. It's better for us to keep the customers we have than basically search for the new ones. Yeah.
Sure.
We
Thank
also
you very
do
much.
other things Matt recommended. So yeah, thank you.
Thank you very much, Agata, for sharing. So Matt, just to summarize, I've got another slide for you, and this is very rich. Of course, we will share all the slides with all the participants, but I really like that you combined all the learnings into one slide. So what is the most important thing? Well, if you would choose just one, what is the most important learning you have that you would like to share with the INMA membership today?
Well, I think it's really capitalizing on the spike in demand. And so to translate that into tactics, essentially what you see here are to really maximize the number of sales attempts. That's obviously meaning, have some content perhaps available for free. However, premium content, raise the percentage of content that's on your site that's designated as premium, or to give away less from a metered perspective. We're also big fans of, to Arvid's point earlier, you're going to convert a lot of your low-hanging fruit, so to speak, early. So you're going to need to start building those relationships with new customers. So get them to register, make them a known user, have newsletters as an incentive, or communicate with them about what your value proposition is. And basically, and then, as we said earlier, capitalize on the spike in demand with keeping your prices high, communicate the value and the quality of your product, and then wait for the spike to recede before you, go back after your kind of discounted type of customer base. So I think that's in a nutshell what we recommend.
Thank you very much, Matt. By the way, you are not looking into the chat, but you've got some fans over there. So Jens Peterson just wrote that he loves your expression, aggressive paywalls. You just contributed to the history of paywalls and the theory of paywalls with this new kind of paywalls. We have freemium, meter, we have dynamic, and now we have aggressive paywalls. Congratulations.
Thank you very much. Yeah, I think we're all needing some sports. We haven't seen any competition lately, so the aggressive adjective came to mind, I guess. But thank you for the comment.
Thank you very much for this meeting. It was an enormous pleasure to have you today, to host you today, to have this conversation with more than 200 people from around the world. So now I would like to turn to Mark, who is having some very interesting announcements to make. Mark, the floor is yours.
Thank you, Greg. Thank you for a great meetup today. Thanks to our speakers and everybody who's joined. We could have spoke for hours as always, but it's gone really quick for time. All I wanted to say is, as you've heard, the link to the slides and the recording will be sent to everyone on this call within the next 48 hours. Take a look at inma.org/webinars for what's coming up. We've got some great stuff coming up. And the one particular, which I think Greg was referring to, was next week, same time as today, but next Wednesday, our usual webinar slot. I'll be hosting a lady you may know. She's spoken at a number of our conferences in the past, called Robbie Kelman-Baxter. And she's written a new book, and it's all about creating a subscription model which is so compelling that no one will want to leave. Now, if that doesn't whet your appetite, I don't know what does. So I hope you'll join us. You'll find it on the website to register. And finally, if you have a subject yourself for a future webinar and you'd like to share with your global industry peers, let me know, mark.challoner@inma.org. That's it. Thanks everyone for joining us. We'll see you very soon. Bye for now.